asset, it just consolidates, right? So this is advanced premium discounts in terms of continuation. And I'm not talking about this as the advanced premium discount. I'm really talking about like this high being used, or like one of these highs being manipulated. It's going to be cleaner than this a lot of times, but you can see here, this asset manipulates this high. It is just a higher tip from gap, but it's still an advanced premium discount. If this asset here is in just higher in the range, this asset's super low in the range. You see that? So this is advanced premium discount for continuation. And there's a big difference, right? So for example, this would be like reversal. Like this is a high that we're actually reversing from. Maybe form the high of day or high of the week or something like that, right? Or this asset here is in like EQ that range or something. This would be reversal. And in order to trade this asset, you do need a strength switch, okay? But for continuation, you don't, right? Because they're both giving continuation signatures, right? I'll explain that in a minute. So it'll look something like this, where both assets reverse, essentially. How do I mark this? Let's do this real quick. Let me make some room. Oh my gosh. All right. I'm running out of room here. So if this is the overall draw on liquidity, for example, whatever. If this is the overall draw on liquidity, right, down here, and this is the reversal, anything internal to that, right, should be used for continuation, right? Like this high, internal, if we start retracing here, let me redo this one. This is the overall reversal, and we start retracing. This high should be used to continue lower, right? Any key level opposing to the draw on liquidity should be used to continue lower, right? So here's the draw on liquidity. Here's a key level, right? If price creates advanced premium discount with this high right here, like this is used as continuation. It's totally different from reversal, right? So here, they're both giving continuation signatures, right? They're both in continuation, if that makes sense, right? Whereas the other version of this asset right here is at the reversal, it's reversing, right? It's having to reverse price, right? Where this asset here, and I'll go into how this actually forms. Like how does advanced premium discount even form? We'll go over this again when I drop assessing part 2, but I don't know when that's going to be. You also learn this as well. But anyways, yeah, this is just when this asset retraces, this asset consolidates like low in the range. They're both continuation signatures. That's what you see right here. So there's a difference, right? This asset retracing, where are we going to cap our retracement, guys? A key level, like a gap, for example. This asset clearly consolidating, right? Indecision candle, right? They both have reasons to continue lower. No objective taken. The daily candle is also an expansion candle. Let me, of course, look at this. Let me do the right settings here. Let's do 4-hour daily. Right, obviously daily is an expansion candle. Right, so this right here is moving against that daily candle, right? And once we continue, it's just going to fill in this wick, right? So if I show you, right, it's just filling in that wick. Right, so this is just retracement. We see this fat wick right here. Because it doesn't make sense to form a reversal candle because we didn't hit anything, right? We didn't hit anything. So it's even more likely to continue because we didn't hit anything. That's how you know it's probably just a retracement. So this like the coupling move that you see, where this asset is retracing higher, this asset's really lower, right? It's just used for continuation, right? And as you can see, this candle is bullish, expansion candle. This candle is bearish, indecision candle, right? So you can obviously see that this next 1400 candle is opening up very close to this gap. So it's going to create a 2-stage PSP into the key level, right? You guys see that? So as soon as we have that, again, like I said, you don't need a strength switch, right? You don't need a strength switch if you guys didn't know that. And I didn't know if we were gonna get all the way down here. I just knew that we're gonna get at least a move lower to hit my trading day. I haven't taken a trade yet today. Like I said, I woke up late, so there was nothing in Asia. Like shit just expanded on all markets. Nothing really clean to me. So this is my first trade of the day, really. So I just wanted a trading day, which is only $150. That's all I really needed. So yeah, I just straight up took it, like right when we CSD basically, right? The 4-hour candle is small, the hourly candle is small, right? Every single candle is basically an expansion candle. So we're pretty much good to take this. All I need to see is a reverse signature. And you get that here, right? Pretty simple. V-shaped signature there. You can pretty much take this. I just straight up like market executed basically, per stop loss up here. Yeah, you're pretty much good to go. And again, your RR is typically going to be above 2R, right? Especially if you're trading reversals. And this is with me market executing with a pretty big stop loss. Like this is pretty large. But I just have to close around 1600 just because that's typically in prop firms cutoff. And I'll obviously go with this. I only need $150, so once price basically created this CSD, so let me show you real quick what happened here. So this candle here, if it'll let me bar play, cool. So I didn't manage at all until this next candle opened up, because technically right here we have this high is technically a gap high on ES. So you can really comfortably go break even when if price did this, right, and then it CSD'd here, then you can move stop loss here, because that would be a valid like lower time for protected entry because we hit a key level, right? And that lower time for CSD would obviously be protected. But we just instantly expanded away like this. So notice how this asset expands away, but this asset here, let me just show you like early on in the candle. You see how this asset expanding away, and then YM is more so just consolidating. This is how you know that YM is going to be the asset that is going to hit this 30-minute gap. So I already knew to go break even, like as soon as we really did this, honestly. As soon as we see a seed here, right, I can pretty much just go break even automatically. Because I know that YM is going to be the one that's going to create the SMT fill, which means that NQ is not going to take out this high, right? And since they're like decoupled in the terms of premium discount, typically the asset that is manipulating, right, is going to be the most violent asset because it has a lot more room to make up compared to YM, if that makes sense. So that's why I took NQ. Again, I didn't really care if it got to these lows or not. I just needed a little reaction, right? So obviously YM got to these lows, but what's the bigger move? It's YM. Obviously it's YM, right? It's a way bigger move. Way bigger move than NQ just going for, or YM going from here to here. But it's not necessarily wrong to take YM at the reversal. Now this is continuation you see here. This is totally different. So you can obviously take this as well. So here you get a 2-stage SMT fill. This candle is bullish and it takes out the high on ES. It is bearish and we do not take out that high, right? And this could be viewed as an SMT break, right? You have SMT down here. It's just a strength switch in general because this asset over here took out highs, obviously. This asset didn't, right? You're getting a strength switch, right? So it's valid to take any type of continuation up in here, right? You can take it on, let's see what's clean here. Maybe ES. You can take it on YM too. So there's a 2-stage here. Happens right here. So when you get this 15 minutes closure here, so this 15-minute closure here that created the SMT fill on a 30-minute, go on NQ, and that 15-minute candle close, the high of it is a gap. So you're going to see that here. We trade into the gap, right? And we know that this candle right here is the 15-minute C2 on YM. So you see that? And we didn't take out that high. right? But NQ did take out that high to trade into the gap, right? So it's just simply like consecutive candle SMT. That's a strength switch as well. I think Freg took this. I know Freg was waiting for the SMT fill on the 30-minute. And yeah, he traded this. So it's a good trade. Good job, Freg. Obviously a V shape here. A V shape right here. Yeah, that's a good trade too. So that does give really good RR here. That's pretty damn good, right? So either one, whatever you take, you're good, bro. That ended up playing very nicely around the same time, around 1600. So either one you take, you're all good there. But yeah, man, pretty simple stuff. What else? What else? What else? That's pretty much it. I did think that oil was somewhat decent as well. I would have traded this asset RB because, like I said, if the daily candle has expanded very largely, I want to open objective, right? So now I come to charts around like 11, or I don't know when I came to charts, like latest hell. Where were we at here? Yeah, so obviously this asset had already taken out objectives, right? This is the main objective right here. It's the daily swing point high that caused the retracement. Anything up here is way out of reach. So I see the daily has expanded. It's not really that interesting to me to trade a leading asset. I'd rather trade a lagging assets, right, into the same high like this, right? This is where I would take RB probably. And what do you need? Ideally is a shrink switch, right? And that's what you get right here, I do believe. 11 o'clock. I just straight up did not see this. And it doesn't really matter which asset you take because, as you can see, this asset already took out the high. You see this right here? Already took it out. This asset did not. So you can scalp this asset to the same high, or you can trade this asset to this high. Whatever, dude. It doesn't matter. Let's see if there's a nice signature here. The RR is not great. I will tell you that. The RR is not amazing. For this asset, you can maybe go 2R beyond the high or something like that. What about over here? Same kind of thing, honestly. The V-shape is very nice, though. V-shape is perfect. But yeah, you're going to have to TP like a little bit beyond the high to like a break even. Okay, you would have got break even there anyways. What about over here? Fuck, that would have sucked. Holy shit. But that would have been valid too. To take, but that sucks. What about 5-minute? Nah, it's really the same thing. Yeah, that's the only issue with your RR not being to a draw liquidity. Because when you hit the draw liquidity, what can happen? A new phase of price right back to your entry. You can do these things where like maybe you don't get 2R to the draw liquidity. Just go break even as soon as we hit the draw liquidity because, like I said, you can get new phase of price. And you just have to extend it to 2R beyond the draw liquidity. Because a lot of times, like, price will do this. Well, it just will, like, trade beyond the draw liquidity a little bit. Sometimes we'll trade right through it, right to your TP. But yeah, sometimes, it'll just do this right back to your draw. But that's the risk you take entering so high in the range, right? So, yeah, I was more so looking forward to waiting for a bigger pullback. That's what I like to wait for. So that's why I waited for NQ. Or I was just going to get no trade for the day. As simple as that. But we got it. So, yeah, that's my trade today, guys. And, yeah, hopefully you guys had a good week. Hopefully you guys learned a lot here. And I will catch you guys later.